Good afternoon uh, to this Friday financial series from FFPAI. Uh, this is a third episode we are doing with NJ Finance in collaboration with NJ Finance and DSD, that is Doctor in Dalal Street in Doctors. So those who have missed first and second episode, I am referring, like, first we have discussed various insurance cover by Mr. Kachwala, and after that in second episode we have discussed wealth creation by equity and mutual fund, that is Mr. Apurva Shah. So today we have invited Mr. Rakesh from NJ, and he will be discussing a tax planning for individual, HUF, and senior citizen. I would like to introduce our today's faculty in a very brief. So if I talk about education of our today's faculty, he is postgraduate in finance and cleared CFP, that is Certified Financial Planner, and CTEP, that is Chartered Trust and Estate Planner exam offered by FPSBI and AAFM respectively. He is associated with NJ firm for last 15 years, and he has created 1000 plus videos for learning and development purposes. He was visiting faculty in PP Savani University for BCom students from 2018 to 2022 and delivered more than 700 hours of training on topic related to investments and insurance to the sales team. So he is very learned faculty, and we would like to know about the tax planning, which is very crucial, and we are approaching end of this financial year. So not taking much time, I would like to request our today's faculty, Mr. Rakesh, to start your talk. You can share your presentation also.
Right, sir. So I'm sharing my presentation, sir. So, sir, can you see the screen?
Yes, yes.
Right. So thank you, Deepak, sir. So good evening, sir, madam. First, let me take this opportunity to thank you for your unwavering services that you offer to the society. So thank you so much. And I'm very fortunate today to spend few minutes with you on a very interesting topic, which I believe personally, which will help you to take better informed decisions regarding your investments in 80 Section 80C products, right? So before starting, right, we will just go through the background of our company, what we are into. So the journey of NJ started in the year 1994. Now, currently, we have a presence in more than 185 locations. So we are serving through our distributors network around 29 lakhs happy investors. We have around 35,000 plus active mutual fund distributors who have built trust with us. You have trust with us and who are doing business of mutual fund through us. And through this, the force of 35,000 plus distributors, currently we are managing an AUM of more than 1.87 lakh crore rupees. And this data is as on around 30th Jan 2024. So before starting, right? So let us, before exploring the options which are available under ATC, so let us understand how are you taxed, right? There are two parameters on the basis of which that your tax has been determined. The first is what sort of person you are, whether you are an individual or a HUF or a company, firm, AOPs, body of individuals, and there are other two categories, right? So depending upon the persons you are, you will be taxed. So there is one important thing that we should keep in mind is there is a common slab for all the individuals, HUF, AOPs, BOIs, and artificial judiciary person, which comes into the other category. So जैसे सर ने बोला कि we will be discussing on HUF. So what is HUF? HUF is nothing but for the purpose of income tax, we consider HUF as a separate entity. So if I am an individual, like if I belong to a certain community like Hindus, I belong to Hindu community, then the government has given me a benefit ki I can form an HUF. There are certain processes that you have to follow for forming this HUF. So one that HUF is formed, the PAN card will be generated, and you can file a separate return on HUF. So you can take the benefit of ATCA on an individual also, and also on a HUF, right? So basically what we are doing is we are creating a new person for extra tax slabs. So some of the common deductions like ATC, ATDs are available for individuals as well as the HUFs. So first was on the basis of the person that you are. Second is basis on the income slab that you are. So you might remember in the year 2020, the government introduced two tax regimes. One was the new and other is the old regime. So whenever we are opting for a tax, whenever we are filing our tax, we have to choose an option whether I want to pay the tax as per my new or as per the old tax regime. So the slabs that you are seeing on the screen is basically of the new regime. So there are around six slabs that you can see up to 3 lakh, it is around 0%. From 3 to 6 is 5, from 6 to 9 it is 10, from 9 to 12 it is 15, from 12 to 15 it is 20, and above 15 it is around 30%. So the tax slabs are a bit lower compared to the old tax regimes. But one thing that we should note here is there are no, if I opted for a new tax regime, in that case, I will not be able to take any benefits under section 80C or 80D. Vis-a-vis, if I opted for old, right? If I continue my old tax regime, in that case, there are four slabs that you can see on the screen. So these slabs are common, as I told earlier, for HOF, for individuals, AOP, BOI, and artificial judiciary persons. So up to 2.5, it is nil. From 2.5 to 5 lakhs, it is 5%. 5 to 10, it is 20. And from 10, it is 10 and above, it is around 30%. However, these are for normal individuals. In case your age is above 60 but below 80 years, then the basic slab limit of 2.5 lakh rupees will increase to 3 lakh. And if the age is above 80, in that case, it will increase to the basic slab will increase to 5 lakh rupees. However, if I'm opting for old tax regime, then I can avail the benefit under section 80C as well as section 80D. So what are these section 80C and 80D? So to check about, there are broadly certain products, investments that we make, or there are certain deductions that we can get if we are investing or if we are doing any expenses under these sections. So section 80C talks about contribution payments to your EPF, your PPF, public provident funds, your home loan principals, NSC, National Savings Certificate. We have ELSS, any life insurance, 5 years FD. These are tax FDs we call it, right? Then your 5 year term deposit with post offices, ULIPs, and senior citizen savings scheme. Probably I have a separate slide for this, a very interesting topic, senior citizen saving schemes. And under section 80 triple C, if I'm contributing to any pension plans, then the cumulative investment, I mean the deduction that I can get is maximum 1.5 lakh rupees. So if I'm investing in ELSs of 2 lakh rupees, then the maximum deduction that I'm eligible to is around 1.5 lakh rupees. So how much I'm saying? So if I'm investing in any of this product up to a limit of 1.5 lakh rupees, then the tax that I save is around 46,800 rupees. Considering that I'm paying around 30%, I'm coming in the tax bracket of 30%. Then you have something called ATCCD, where there is specific NPS, we call it National Pension Schemes, and Atal Pension Yojana. So they over and above this 1.5 lakh rupees, there is additional 50,000 rupees one can avail, and the contribution and the tax that you save on this 50,000 rupees is around 15,600, and it is again over and above this 1.5 lakh rupees. Next, it is around 80D. So this is pertaining to your Mediclaim health insurance premiums. So there are certain slabs that we will see in the next slide, coming slides. And the tax that you can save is around 23,400 if you are making a contribution of 75. This 75 can go beyond 1 lakh rupees. I'll tell you how, in which conditions in the next few slides. So this is the overall glimpse of what the products that we have under section 80 CCC, 80 CCD, and 80C. So Abhi, what we will do is we will talk about the investment products, right? So when this period, JFM, we call it January, February, March, this is a period when everyone is running behind the CA so that the maximum tax outflow we should be lowering by investing in certain products which are been given, made us available by the government. So these are some of the products that we can invest in, right? So first is your PPF, where the lock-in period is of 15 years. So this products that we investment products, right? Every investment product will have a certain lock-in periods. So lock-in in the sense I cannot withdraw it. So in PPF it is around 15 years. The return, excuse me, is around annually 7.10%. This is currently that we are talking about. And the tax income is free. I mean, any tax that we are generating on it, it is tax free. No tax has to be paid on the interest that we are running on. Then we have NSC, National Savings Certificate, where the lock-in period is 5 years, and annually the rate of return that we get is around 7.70% currently that we are getting as on 31st Jan 2023, and the interest is again taxable. Next is Bank FD, 5 years. Interest is in the range of 6 to 7%. This 6.6 I have taken off SBI Bank, 5 years term deposit. And again, here also the interest is taxable. So whatever interest that we are earning on NSC and bank FDs, you have to, it will be added in your total income. And as per your tax slabs, you have to pay the tax. Then we have ULIPs, where the lock-in period is of 5 years. Your money will be locked in. You cannot withdraw it. However, the returns will be earned as per the underlying assets in which the ULIP has been investing. If it is a equity, then probably you will get returns similar to equity. If it is a certain site of debt, then probably again it depends upon what sort of securities in which the ULIP has invested. So the returns are linked to the underlying asset classes, and there is a ULIP maturity benefit or debt benefit is exempted. Then we have ELSS. So again, ELSS, there is a lock-in period for 3 years, and the current returns are which are linked to the market, and it is 10% long-term capital gain tax applicable on above 1 lakh gain. That is, the returns again of ELSS product will depend upon what underlying equity markets have been performing and how the returns have been taxed. So whatever capital gain is, you have to pay 10% tax on the gains. However, there is an exemption of 1 lakh rupees. So if I'm making a gain in a financial year of around 2 lakh rupees, so 1 lakh will be exempted and the remaining 1 lakh rupees will be taxed at the rate of 10%. So on that amount, 10,000 rupees, 10,000 probably I have to pay taxes. So now talking about ELSS, right? So why ELSS we are talking here? Because here you can see the ELSS is having one of the lowest lock-in period, right? एक benefit होता है कि it is one of the lowest lock-in period, and because the returns are linked to the market, you can get better returns than the traditional tax-saving products. So why we are recommending ELSS product? So first is by investing in ELSS product, we probably will not only be able to save tax, but however we can also build wealth in a long run. जब भी मैं invested रहता हूँ in equities or ELSS, there is a opportunity that I can build wealth in a longer period of time. Moreover, there is a shorter lock-in period. So in case of any liquidity requirement, this is something which comes in very handy because the lock-in period is only for the period of 3 years. And how do I invest? there is an option that you can invest through a lump sum. You can invest 1.5 lakh rupees at a time, any amount. There is no upper cap on this ELSS product. And if you want to do it in a systematic way, then you can do an SIP also. So through an SIP, you can invest in ELSS. So this we have seen, any gains, any that you are incurring on the ELSS investments, that will attract tax of 10%. However, 1 lakh rupees is being exempted. So why ELSS is better? First, the shortest lock-in period. And the second is it has the opportunity to generate better returns compared to the traditional products that we are having. So why I am saying it? Let us compare this with the data that we have. So this data is very interesting. That probably, I guess, everyone can see it on the screen. So this I have taken for the last 10 years and 15 years. If before 10 years, if I have started investing in ELSS product, or these four products like NSE, National Savings Certificates, Bank FD, PPF, and ELSS. These are the four products that I have taken for comparison. So before 10 years, if I have done every year 1.5 lakh rupees investment, right? So my amount invested in 10 years would have been 15 lakhs. This is the historic returns that I'm talking about. So 15 lakhs I would have invested as on 31st December 2023. My the value in the NSE would have been 22 lakhs. 15 ka 22.7 lakh rupees ho jata. In bank tech FDs, it would have been 21 lakhs. In PPF, around 22.82 lakhs. However, if I've invested in ELSS, so in the same period of 10 years, I would have generated a corpus of around 36.50 lakhs. So you can see how much wealth can be created if I had been invested in a ELSS scheme. And one thing that I like to point out, this return that we have calculated is not on a particular scheme. We have taken an averages of all the schemes which were available 10 years before. So 10 years before there were 24 schemes, and this is the average return of the 24 schemes in the ELSS categories. Right. So next, so if I have started 15 years before, right? So one thing that we always promote, that we always pitch to the investors is you should give time to the market. You should remain invested in the market for a longer period of time because it creates compounding impact, right? The longer you remain, the longer wealth will be created. I believe ki Apurva Bhai and earlier sessions which were conducted by NJ, this probably would have covered. Right? So if I have invested 5 years back, अगर मैं 5 साल जल्दी start करता investment, that is 15 years before, in that case I would have invested 22.5 lakh rupees. मेरा जो NSC का वैल्यू रहता आज के तारीख में वो 42 लाख रुपीस होता, FDs का 39 lakhs, PPF का 43 lakh rupees होता, and my ELSS value would have been around 85 lakh rupees. So this is what we talk about wealth creation. The more you remain invested, the more wealth will be created. So you are getting an advantage of deduction under Section 80C. Moreover, you will be able to build wealth in a long run also. So any of sort of your financial goals that probably you want to, any needs that you have, so these needs can be accomplished by investing through this equity or ELSS products also. So next, again, one example. So now instead of investing this 1.5 lakh rupees every year, what I've done is I've invested 1.5 lakh rupees 20 years before. So my 1 year investment was 1.5 lakh rupees. After 5 years, that investment grew to 2,81,594. So this is again, we have taken a return of the ELSS categories. So 20 years before, there were around 13 funds, 1 3, which were available. So it is an average of these 13 funds. So in 5 years, from that is 20 years before, if I started, 5 years बाद उसका 22.181 lakhs होता. After 10 years, it would have been 6.61 lakhs. After 15 years, around 13 lakh rupees. And after 20 years, that value would have increased to 31 lakh rupees. So you can see the longer that I invest, right, from 1.5 lakh rupees, my wealth had been multiplied by 20 times in the next 20 years. So this is why we say you should invest, you should remain invested for a longer period of time. So this was about the lump sum investment that I would have made in a equity 20 years before. What if I have invested through a SIP? तो उसका भी आंसर सिंपल है कि अगर मैं 10,000 का एसआईपी करता 20 years बैक, सो फर्स्ट ईयर में जो रिटर्न होता, सो माई इन्वेस्टमेंट वैल्यू इज अराउंड 1.2 lakh rupees. My corpus in that 1 year, 20 years back, right? So I've started this on 31st January 2004. तभी से अगर मेरा इन्वेस्टमेंट चालू करता तो मेरा 1 लाख 1 ईयर में 1.5 lakhs होता, 1.58 lakhs. In 5 years, my total investment was 6 lakh rupees. My return would have been just 5.9 lakhs. So there was a downfall of minus 0.20%. But however, in 10 years, the return would have been 10.96%. In 15 years, around 13.17%. And in 20 years, the return would have been around 14.73% through SIPs. अगर मैं systematically investment करता for the last 20 years, then probably I would have invested 24 lakh rupees. And the value of this 24 lakhs rupees today would have been 1.28 crores. So this is the amount of wealth probably the investor would have created if he had invested it through an SIP 20 years back. Again, I'm saying this, the returns that we are considering here is not of a particular scheme. This is a category return that we have taken, that is of 13 schemes which were available on 31st Jan 2024. So this is something that we should understand why we should invest in ELSS vis-a-vis not compared to the other traditional products, right? So one basic rule of investing is whenever we are investing, so there is something that we should always check for is whenever I'm making my investment decision, the any in any asset class or any product, the first check mark is basically whether that investment will be able to beat the inflation or not, right? So if the inflation is 6%, if I'm getting less than 6%, then probably I will never be able to create wealth because the earnings that I'm getting is less than what the inflation is, right? So we call it as a real return. That is the returns that you are considering after the impact of taxation and also after the impact of inflation. So this data again we have taken the slide that I've shown you earlier. Every year, if I had invested 15 lakh rupees, so in 20 years, I would have made a return in NSE of around 7.82%, in PPF around 7.92%, and in bank FD around 7%, and ELS is around 14.41%. So these are the sort of returns that I would have made if I had invested every year 1.5 lakh rupees in these products that you are seeing on the screen. Now let us consider what is the post return after, I mean, the post tax return, that is after discounting the impact of taxation. So NSE, there is a 30%, the interest or tax rate, I have considered 30% tax bracket. So 7.82 was the return. So 30% was the tax. So after considering the tax, it is 5.47%. Next, PPF, because the interests are tax free, so I have kept it as same 7.94. Bank fees 7% was the return generated over 20 years. So after considering 30% tax, it will be around 4.90. So the post tax return is bank FD 4.9. However, in case of ELSS, the return was 14.41. Post tax return is around 10%. I have considered 10% tax ke baad, it is around 12.97. Now, this is the post-tax return that we have seen, but we are not through yet. Next, we have to compare what is the return that I've generated after considering the inflation. So in this 20 years, the average inflation was around, we have taken WPI and CPI's average for the last 20 years. It comes around 5.77% in the last 20 years. So after tax and after whatever returns I'm getting after adjusting for inflation, the return that I'm going to earn in NS is negative 0. Minus 0.30. PPF, it is around 2.17%. Bank FDs is around minus 0.87. And ELSS, the real return, the real wealth, the real rate of return is around 7.20%. So that is the reason we say if probably not only tax saving, but when we talk about wealth building, then probably ELSS will help you to achieve your needs. So very important slides to know. Next, talking about the health insurance, that is section 80D. So what is the deduction that is available? It depends upon two parameters. First, for whom are you paying the premium and what is your age? So if you are self and you are paying premium for yourself, your children, your uh, spouse in that case. And if your age is below 60 years, so that the maximum deduction is around 25,000. And if your parents' age is also below 60 years, in that case, the maximum deduction is 25,000. So these are the first cases of the case where the age is below 60,000. Sorry, the age is below 60 and you are paying the premium for self and the parents. So the maximum is 50,000. Second is you are below 60,000. That is, I'm paying the premium. I'm below 60, but I'm paying the premium for my parents who are above 60. In that case, I'll get a deduction of 25,000. And for parents, I can avail a deduction of 50,000 rupees. So the total amount is around 75,000. In case me and my parents are both above 60, I can get a deduction of around 50,000 in each category. So the maximum deduction that I can get is around 1 lakh rupees. So this is how I can get the ATD benefit under health insurance. Next is a senior citizen saving schemes. So probably you might be thinking, ki, though this scheme is available under the ATC option, why I have not compared it in the earlier slides? Because there are certain criteria that it is not available for everyone. So if you are of a specific age, then only you will be eligible to invest in that, right? So that is the reason we have not included in the earlier slide. But yes, these schemes are available under post office, and any individual who is above the 60 years can open an senior citizen saving account either individually or jointly with the spouse. The minimum deposit is 1,000 rupees and the maximum is 3 lakh 30 lakh rupees. Sorry, and whatever amount that you invest, you will get the benefit of it under Section 80C. The maturity benefit here is again the 5 years, 5 साल का है. However, individual can extend it for a period of 3 years. मैं 3 years के block में I can invest it. The returns that I'm going to earn is around 8.25% per annum it is, and the interests are being paid on a quarterly basis. So यहाँ पे whatever the interest that we are running, if it increases, it goes beyond 50,000 rupees in a financial year, in that case you will be eligible to pay tax. There will be a TDS of around 10%. So this is a wonderful scheme. If anyone probably is in that age bracket, can explore this product because you are getting around 8.2% per annum returns on the saving schemes. However, there is a maximum limit of 30 lakh rupees that you can deposit. So this was about the senior saving schemes. So coming back to our topic, if I want to summarize it, what we have learned. So it is something the investment whenever we are probably making our investment decision where to invest. So it should be made first on the basis of the investment objective. I always say ki the why of the investment should be clear, ki why I want to make an investment. So if it is for the purpose of tax, if it is for the purpose of achieving my financial needs in the future, then probably I will select a product accordingly. And it also should depend upon the risk profile of the investor, whether that person is really willing to take that risk, because there might be certain individuals who might not be comfortable with the market volatility. Right? I might to I love to invest for 20 years, but if markets are down, probably I do not want that scenario on my investment. So that particular investor might not invest in equity oriented product. So you have to check your objective, ki why you want to invest, and also the willingness of the investor to take that risk on that investment. Because markets are volatile in short term, probably there is a probability that your capital might come down, but however, in a long run, you can get a decent returns in the future. Next, ELSS is something that comes with a dual benefit of tax saving and wealth accumulation over time. And the best part is, under all the products that we are having, it has the shortest lock-in period of around 3 years, right? And it has a potential because it is the returns are linked to the market, so it has a potential to generate better returns in the long run. And there is no upper cap. If I'm investing in a ELSs, the minimum investment will depend upon the scheme in which you are investing, probably 1,000, 5,000 rupees. However, there is no upper cap. Any amount that you invest, you want to invest, you can invest, you can do it. However, the Section 80C benefit you can avail only up to 1.5 lakh rupees. So with this, I'm ending my session. If you, sir, have any doubts, probably you can ask. I hope I have done justice to your time, sir.
You can stop sharing your screen, sir.
Yeah, yeah, I'm stopping it. Yeah.
Yeah. Rusil bhai, any question on YouTube? Okay. Huh?
Right, sir.
Can can you post that question on this chat box? Yeah. So one thing is in PPF, can you answer that in PPF compound interest is also tax free? So is it safe and then ELS, which is equity based? So return is not guaranteed.
So in PPF, the return is the it has been declared. Can I am okay? The PPF, the returns have been declared on a regular basis.
Yes.
So these are guaranteed returns in PPF. Guarantees in a sense, whatever the rates have been declared, you will get that returns only.
Hmm. But we will earn interest on interest also, na? Compound interest. And that is also
Compounding, yes,
tax
you will
free.
get the compounding impact. Yeah, yeah, yeah. In PPF,
Yeah.
you will get the compounding impact.
Yes. Yes. So
Yeah.
Dr. Borgaonkar is a very senior
Right.
family physician and past president of
Yes.
FFPAI also. He is asking, is it true that senior citizen need not file income tax return after age of 75 years?
Right, sir. Probably this question I'm not authorized because I'm not a CA, but to my knowledge, probably you can get it verified from the CA also. But if you are beyond 75, probably you do not have to. There is no mandatory thing to file an ITR, sir.
Okay.
Yeah.
Any other questions? Okay. So on behalf of FFPI, I thank you very much, sir, Mr.
Thank you, sir.
Rakesh Bhai,
It's my pleasure.
for very informative
I
and
apologize first. Yeah, I apologize because of the issues that we had earlier because of the internet.
no, no, it's okay.
So
There is always some technical issue. Yeah. So I very much thankful to you for sparing your time. And those who have not, this whole conversation will be uploaded on YouTube also, and it will be shared in all FFPI groups and social media. You can watch later on. So thank you very much.
thank you, sir.